Hi, this is Boris reporting from NYMEX, and the biggest story in the currency market today is the fall in euro-dollar. Overnight, euro-dollar took a tumble after ECB President Mario Draghi once again reaffirmed that the ECB is in no rush to remove quantitative easing and to move to a more normalized monetary policy. One of the key reasons why they're so concerned about getting too tough on monetary policy at this point is that the euro-dollar has really been resilient and risen substantially over the last several months. As a matter of fact, euro-dollar is trading near multi-month highs at around 125, despite the fact that U.S. interest rates are much higher than the European rates. The other reason that the Europeans are so concerned about the rise in the euro-dollar at this point is that the trade tensions with the Trump administration and the rest of the world, and specifically even with the Trump administration and our European partners, have made them a lot more sensitive towards the exchange rate differentials. Generally, the ECB is not that concerned about the exchange rate and only focuses on inflation as its main mandate. However, over the last several weeks, they've been consistently talking about the fact that they're not happy with the exchange rate because I think they're concerned to a much greater extent about the impact on trade. However, despite all these efforts at soft jawboning, all these efforts to basically talk the currency down, the currency remains stubbornly well bid. And the reason for that is because on this side of the Atlantic, the economic conditions are not nearly as good as everybody anticipated them to be. Inflation remains very muted, as we saw yesterday in the CPI number. And today, U.S. retail sales were not nearly as good as the market expected. And this is the third consecutive month where retail sales actually contracted on a headline basis. This is not a recipe for a very strong and hawkish Fed. And for now, the markets, especially the fixed income markets, are essentially staging a boycott on U.S. yields. So despite the fact that the Europeans consistently try to talk the euro down, it may actually begin to rise again as the markets simply begin to allocate more capital to the other side of the Atlantic, basically thinking that the dollar is not going to rise on interest rate differentials. That's the biggest story in the currency market today. I'm Boris Schlossberg reporting from NYMEX.